Well, welcome back, everyone. I'm John Muschalek with HilltopSecurities, and I'm back with my friend Tom Kozlik, Managing Director and Head of Public Policy and Municipal Strategy for Hilltop. Tom, man, there has been a lot going on in Washington, right? Every minute there's a new news release coming out. There's a new tariff. There's a retraction of a tariff. With all of these announcements that are coming out and hitting the market, then there's a contradictory statement that comes out right after that. Talk to me about what you're seeing in the market confidence, and subsequently the investor behavior.
Yeah, from a big picture perspective, from a macro perspective, we've seen almost nothing but uncertainty, especially during the week of April 7th. Starting this week, the week of April 14th, one of the things that I've been really talking to investors about is that municipal bonds are on sale. I mean, yields have come down a little bit, but we're still looking at yields that are, we got to go back to 2023 to see yields this attractive. So, they are generationally enticing again, to that high point that we were seeing back in 2023.
So talk about that a little bit. There are attractive yields out there. We've seen, I guess, what some would call extreme market conditions, probably something we haven't seen going back to COVID or maybe the financial crisis. What should investors be considering right now?
Yeah, so I think that I don't want to call a bottom. Right. I'm not necessarily saying that yields aren't going to go higher, because every single time someone throws a little more grain of sand in the gears, you never know, right? But I think that continuing to allocate funds into tax exempts on an ongoing basis really makes sense.
Okay. You're putting out a report literally almost daily, not right now, with the changing market conditions and the news coming out of Washington. One of the topics that you've covered in a number of your articles is the elimination of the municipal bond tax exemption. Yeah. Most recently, you put out an article, I think it was today, as a matter of fact, talking about how it looks like the chances of that happening have gone down significantly. Can you talk about that a little bit?
So just after the election, my sense was that there was a 50% or greater chance that the tax exemption could be eliminated or significantly changed. And so because of the House's budget framework that they released last week, and the fact that they're only planning on cutting about $1.5 trillion of spending, tells me that they're not going to be looking for a lot of pay-fors. And that's the big reason of why it is that the threat to the municipal bond tax exemption for state and local governments isn't as high. For private activity bonds, it is close to or 50% or greater until we see something change on that front. But one of the things that I also want to mention too is that the advocacy and education that a lot of folks in the public finance network and other organizations are doing is really having a positive effect. And that should not change despite what we're saying here today.
Agree with that, and I know HilltopSecurities has played a large role in that. Yeah. We've had a strong presence in Washington and in a number of states to push to maintain the municipal tax exemption. But talk about that all the way down to the investor level. What implication does that have for the individual investor?
So one of the things that I've been hearing from certain large institutions, medium-sized investors, and small individual investors is that they've been concerned about the tax exemption going away. On top of that, they've been concerned that tax-exempt interest might not be grandfathered in if there's a change. And so this doesn't necessarily eliminate that chance, but it really reduces it.
Well, it certainly is an interesting time in the market. Yeah. We've made it through tax day, so happy about that, but we will sure be back with more information on a MuniMinute as things progress in the market. Thank you for your time today.